Hello, everybody. It's Greg here from Master Trader. We typically look at things from a longer time frame perspective, daily, weekly charts, sometimes monthly charts. I thought for this particular chart of the week in video, I'd review some of the things I look for on the intraday time frames and how to measure the strength, the weakness, or the lack thereof of each from that perspective. So what I have here is we always look at the daily time frame to see what the trend is, where support and resistance is of significance. And I look at an hourly chart. This is my longer time frame from an intraday perspective. This is on the bottom here, advancers minus decliners, to see how strong a move is to the upside. When that move to the upside, measured by advancers minus decliners, reaches an extreme, which suggests it's likely to start pulling back. When that strength, either to the upside or on the downside, starts to wane and diminishes, and even though prices are making higher highs, the strength is narrowing or becoming less than. Then the AD line on a 5-minute time frame. Is it trending up or is it trending down? Is it bottoming and turning up? Then I have different levels. And so down below, since things were more bearish prior, down below, this is very extreme. There's a lot of power to the downside, down under minus 2,000. Tremendous amount of stocks and a bit extreme, but you don't want to fade that because it's strength. You have to wait for it to start to diminish and start to turn up. And there's a 20 MA on there. And you can see it started to turn up. And then as it's coming down, you can see where did it come down from. So you can see up here, it really wasn't that strong. It was up above 500, but it wasn't that strong. Whereas if I can scroll this back a bit further, you can see up here, this was a really strong day where prices were up 1,000, 1,500, 2,000, and you don't want to fade that because of the extreme strength. And then it begins to diminish, and of course there was a big down day at that time. It doesn't happen that often where you get such extremes, bullish, such extremes, and then bearish, such extremes so close together. But we monitor this during the trading day to see for subtle changes and how much it changes. And then on the volatility index, is it trending up, which is bearish, or is it trending down, which is bullish? And then we're looking for alignment where things may be improving on the AD line. And at what level was it improving from? So improving from minus 2,000 or so and moving up versus if it had pulled back to say minus or plus 500 and trending back up toward 1,000, it's a completely different day and a completely different set of probabilities as to a trend moving up if it was bottoming. And then here I've got the advance NYSE advancing stocks minus declining stocks, or a tick indicator. And it's very volatile as it moves up and down. And we don't really pay attention to patterns on it. We pay attention to what level it's at, where it spends the majority of its time, and when it reaches extremes. So as you can see down here, on this particular day, went way under minus 1,000. It's pretty extreme now, near minus 2,000, which suggests there's gonna be more selling coming, and you need to see it begin to dissipate. And so what we see here as the day progressed, as it came down to test the low, this tick came down to under minus 1,000, but was still well above where it was here at the open there. And as the day went on, it improved. And then we had a tick extreme, a bullish tick extreme, where it went to plus 1,000 on the upside. And that was confirmation of that wide range breakout bar, which suggested prices would go higher. Well, yeah, they did go higher. But put it in perspective of the AD line, which was starting here from under minus 2,000 and improving, and the VIX, which was higher, and it started to roll over. Yes, you do have a higher probability on the long side at that point, but it's still not the same kind of day as if this was at a much higher level. Maybe the volatility index was actually pushing down early in the morning and rallied up and then rolled back over. So you have a different set of parameters, levels on any given day. You can see as I'm scrolling back here where it was down and then it went back up. On this day, it was more of a power up day as it was trending up. And we can scroll back to that point in time so you can see what I mean here, if I can get to it. Okay, so we're coming to it here. You can see the line scroll up. And you see how it was trending up so tight? So you got more of a power type of an uptrend on that day where the AT line is up there at plus 1,000 and up near 1,500. So it's given us a objective measurement of strength or the lack thereof or weakness where sellers are in control, if things are moving down, by what degree sellers are in control, and then on higher time frames looking to where support is, where resistance is, and of course that power from the AD line. And I've got it on my daily chart as well to see if there is extremes at the end of the day or where it's spending the majority of the time. So I hope this is helpful to you. If you're an intraday trader, this is kind of like your dashboard in a car, like you'd be looking at your oil pressure gauge, your temperature gauge, your tachometer, kind of what this tick is here, to see where things are reaching an extreme where, if you push the car too far, the engine's going to blow up, sort of where, the ticks have been staying up at, well above plus 1,000, and this is up at plus 2,000. And then, of course, we would look at patterns where they would suggest momentum is stalling and such. But it gives us this objective measurement of what's happening, which keeps us focused on what actually is, based on our internal market gauges, as well as support, resistance, and trend. And by putting that together, it keeps us from getting involved in what we may wish for, maybe based on what our position is or where we believe things might be going. And I'm not saying you're wrong on where you believe things might be going, but if the market internal gauges and trend in multiple time frames are in agreement with that, you have a greater probability of being on the right side of what your belief is and what the market is telling. So, as always, if you have any questions, email me, Greg@MasterTrader. Join us in the green room where we talk about these internal market gauges and trends and intraday time frames on a daily basis. And we'll talk soon. All the best.